typically bankers give around 40 to 60% of a bonus is deferred. Most of that tends to be restricted stock rather than cash. And the reason for doing that is to better align how much bankers are paid with how their banks ultimately do.
How much can the actual value of bonuses then vary between when they're awarded and when staff can actually cash them out?
There can be a massive variation. I mean, at the kind of at the bad outcomes end of the scale, you have the Credit Suisse collapse, where people who were awarded shares which hadn't yet vested saw those shares effectively worth pretty much zero. At the good end of the scale, we had a case from 2012 or so where Bank of America, for every $100,000 of stock you got, if it had vested in years 1, 2 and 3 and you sold it at those points, you would have got about $270,000. So that's almost 3 times the actual number, which is a great outcome if you stayed.
Yeah. So who gives the kind of best bonuses then, and how much of a difference is there between American and European banks? I mean, tied into this is the whole point. It's meant to be motivational, isn't it, for people at the high end of the bank?
It is meant to be motivational, and it probably won't surprise most of our listeners to learn that the most valuable bonus currency, as we call it, comes from the US banks. If we look at the years from 2008 to 2023, Morgan Stanley and JP Morgan are pretty much tied for the most valuable bonus stock. And because that period also includes the financial crisis, lots of highs and lows, every $100,000 at those two institutions was worth about 130,000 in actual money. As I said, big variations year on year. The European banks, not so great. There's only one European bank, and it's UBS, which is doing better than any of the Americans. UBS is in 6th place overall. The other European banks are doing pretty poorly. The poorest was obviously Credit Suisse, because that all got totally wiped out. Deutsche Bank, as you'd expect, also not doing so well. So the poor Deutsche bankers, on average, over that time period, their bonus has always been worth less than what they were told.
How does this play into how it affects staffing at these banks, both in those people that decide to stay, or also how banks try to retain staff?
So I think if you're thinking about leaving, you want to think about how much your shares are going to be worth going forward. And if you're with a bank like Deutsche Bank, where you think, okay, I have these shares, they may be worth 300,000 or they may be worth 100,000, it makes it a less compelling it makes staying a less compelling prospect. Whereas if you're at a JP Morgan and you think, okay, I've got these shares, they're worth 200 grand. If I stay until they vest, they might be worth 400 grand. That makes you want to stay.
Yeah. If you've got a Bloomberg terminal, there's a fantastic function that you've embedded within your piece that I want you to tell us about.
So if you want to play this weekend or even play today, we have an Excel sheet which allows you to plug in the name of the bank where you work or where your friend works, if you're nosy like that, and you can put in any vesting structure. So we've used for the piece assumes it vests in years 1, 2 and 3, but there's a variety out there. You can put in yours. You can then put in any other institution. This works for anything listed. So for our actual analysis, we've used the 12 biggest banks who give bonuses, but you can do anything and you can see how much more you would have been worth if you had worked for a different bank back when you got that offer 10 years ago. Or you can game out lots of different things, and it's just a fun tool to play with if you're into fun Excel sheets, which we are here at Bloomberg.
You're hoping those people are going to end up really regretting their life choices from 5 years ago.
There may be some tears.
Oh no.
Laura Noonan, our senior finance reporter, thanks very much.